enough of that. Enough of that. Bitcoin's going to the moon. It's at 83,000 right now. But that's not what we're going to talk about today. We're going to talk about some inverse fair value gaps today. And some BPR. Look at that. My hair is all over the place right now. Bam! Let's get right into this video. Come on! Such a good day. Great day to have a day. Inverse fair value gaps and a BPR. Balanced price range. These two confluences alone have leveled up, my hair. These two confluences alone have, like, next level helped my trading. So a balanced price range. We go right here. We have a candle. We have another candle. Bam. You guys already know what this is. It's a fair value gap. So when it's a fair value gap, and then say this candle goes through it, that inverses the fair value gap, meaning the fair value gaps get disrespected. It's just a fancy word for that. Meaning, again, an inverse fair value gap means the original fair value gap broke, and now price wants to gravitate towards there. Oh, that's really long. All right. So an inverse fair value gap means the original fair value gap broke, and now price wants to gravitate towards the inverse fair value gap. It'll make more sense with the live examples, but right here, it inversed it, and then it creates this BPR. So this whole candle is a BPR. So when a candle goes through the fair value gap fully, it turns to a BPR, and when it takes a couple candles to break the fair value gap, it's just a inverse fair value gap, which turns into a break of structure. What's that? That's all it is. So I'll let you guys get a picture of this. Or pause right here if you guys want to take notes of this, and then I'm going to delete this, and we're going to go to live examples. So right here, let's show, right here. Perfect. Right here, we got a fair value gap. Look what happens. It gets disrespected, broke structure, showing the inverse, but look what happens. A candle fully breaks that fair value gap, meaning you see that little wick right into there, meaning this isn't a part of the fair value gap, or the BPR, sorry. And when price gravitates back towards that area, that's where price is balanced out, and price is going to continue going up. So at first, the fair value gap was going down, and if it would have respected it, it would have kept going down. But now it broke it, and now if it hits it, it's going to continue going up. So then, right Here's another BPR right here, because we have the fair value gap right here. And then as you can see, it wicks through this candle. This entire candle wicks through it. So you're going to put the low right here at this candle. And then at this candle, you're going to put it right there. So whatever has never touched, whatever hasn't wicked into it is going to, and then look what happens. Balanced price range. Price goes to balance it out, goes up. And whatever goes, like whatever wicks into the fair value gap, like right here, like this fair value gap is, this candle wicked into it. So then you would just been like, okay, I'm just going to cut it down to there because that's just a more accurate depiction of it. And yeah, that's about it. Let's try to show an inverse, where an inverse happens right here. Damn, I'm just on a roll right now. So look what happens. Fair value gap, still fair value gap because it opened and never closed out of it. Closes out of it. And then it inverses the fair value gap, meaning it broke structure, and then it floods the face down. Yeah, it's relatively simple information right here. What happens? Closed above it, inverses it, continues going up. All an inverse fair value gap is a break of structure. That's all it is. So then let's go to NASDAQ. NASDAQ has been showing better price action. I think I found an example for showing a BPR and an inverse on a live trade. So let's get right into this. We have buy side or sell side liquidity right here. We have sell side right here. Market opens. We go down to the 1 minute. Market. All right, market opens right here. Market opens right at 8:30. What happens? Inverse fair value gap gets hit. That was a dump truck. That was so loud, Jesus. Anyways, inverse fair value gaps hit, or fair value gap right here, sorry. It inversed the fair value gap. I mean, you could have taken a trade off of this. It would have been probably very stupid. There's not really any other confluences in here, but inverse fair value gap, look what happens. Floods the face down. Right here, sweeps out this liquidity at open, and then look what happens. We have this BPR, or we have this fair value gap, fair value gap. We have this little wick right here, turns into a fair value, or a BPR right here, and then what happens? Price goes into it at a later time. Oh, excuse me, I'm getting way ahead of myself. Breaks it again, turns into an inverse, showing it's going to break to the uptrend. It breaks to the uptrend, takes out this liquidity. So you could have been like, okay, it broke a BPR, which is big price range, and then it filled this fair value gap. And then you could have been like, okay, I'm going to take a trade off of this. Stops right here. And then, I mean, this turns into an inverse fair value gap. Respects it right here. You could have entered right here. You would have put stops below this candle. And it would have broke through it. Right here, it barely broke through it. But you could have targeted right here. It would have broke through it, but it wouldn't have hit your stop loss. And you would have already had a previous entry, so it wouldn't have even mattered. And then look what happens. Absolutely drills your TP. And another thing, I talked about this in my video that I'm going to post today, actually. Today is Monday, by the way. Happy Veterans Day. If you're a veteran, thank you. But goes into retracement, hits this 50% marker, continues going up. And this day was very confusing because it hit sell side liquidity, and then it went and it hit buy side, and then it continued going buy side the entire time. Inverse fair value gaps are super simple, and so are BPRs. So balanced price range, or BPR, is a fair value gap getting broken, which creates another, and then it turns to a BPR. And then inverse fair value gap is a fair value gap that gets broken but not turned into a BPR, which results in a break of structure due to the fair value gap getting broken. And pause right here if you'd like, but I might have poorly explained this one. But right here, so an inverse fair value gap, I finally found an inverse fair value gap example. It's November 7th, Thursday. And right here, we have an inverse. What happens? It turns into it's a fair value gap, it gets respected, and then bam, it slams through it, breaks structure, goes all the way up. Right here, we have another inverse. This is just really crappy price action. But as you can tell, it breaks it, respects it, wants to go down again, tries to respect it, slams through it on this one, and then it continues going up. And then, yeah, that's really all I got. Right here, what happens? Fills it, tries to make it a fair value gap, breaks structure, smacks it, continues going up. It's just a break of structure. So right here, instead of getting an entry, you would enter it at the same point on these ones, but let me try to find an example. Because majority of the time, yeah, right here. So say it would have broken this fair value gap and it didn't break this high, you could have still gotten in. You would have gotten a better fill because it broke the fair value gap, meaning it's going to break to the uptrend. And it's just another, fair value gap, or think of it, inverse fair value gap as just a break of structure. It's all you need to think of it as, because that's all it is. I've taken so many trades off of a fair value gap, getting disrespected, and that's my entry, because it's just how it is. And it's if all you do is simplify the hell out of everything, trading is going to be super, super simple for you guys. And the minute you start overcomplicating everything is when everything is going to go to shit. It really is, because you're not going to get good at trading from just being overthinking, overcomplicating everything. All that's going to do is hinder your process and make everything so much slower for you guys. Hope you guys enjoyed. That's all I have for this video today. It's a longer video, so I hope you guys didn't mind. And I hope you guys are enjoying the playlist. And yeah, that's all I got for you guys. Thank you.